Good afternoon, everybody. This is Chrissy from Solstice ATR and Vulcan Capital Research. I hope everybody's doing great. Let's just go over a couple of things. First of all, before we start, what I want to say is basically how much damage was the S&P 500 or the futures have done this week in the stock market after the sell-off on Thursday. I'm going to cover in this video NU and RAY signals that shed light on the prospective overall market before people start assuming if we are bearish or we are bullish. So I don't want anyone to be biased to one side. We're going to trade what we see. Like usual, technicals are our friend, and we trade in the direction of those moves. Realistic expectation about normal to be experiencing or expecting the volatility. And I said this in my last couple of weeks, the videos. Be careful of the volatility being picking up. It may have a drawdown in the market, say between a 4.26 to about 8.5%. And I will show you why I'm saying this. And at the same time, the overall market has not changed to being fully bearish. This is the weekly chart on the combination of those four instruments, the SPX, the NASDAQ, the Russell, and the Dow Jones Industrial Average. So far, we are above the 38,125 and above the 61.8 fib. As you can see, that one is sitting on 61.8. That fib is sitting at 38,114, and we are still above on the daily, which we retested the 50 simple moving average is flatlining. So let's go looking at it on a daily chart. We're going to go time frame weekly. We're going to go to timely. We're going to go daily instead of, we're going to go here to 6 month, 9 month. Instead of weekly, we're going to go to daily and push OK. It's coming up. And if you noticed on the daily chart, we're still in an uptrend. We retested the backside of the channel. We closed right on the simple moving average, 18-day simple moving average. If you notice, the 50 simple moving average is a little bit further down. Can we lose the 116,200? Possibility. We still have this old channel from the weekly chart. If we lose it, expect it to come back to here and get a continuation back to the upside. What it'll do, it'll create a shoulder, a head, and another shoulder to continue higher. So that's the combination of those four. What I'd want to basically show you is now taking a look at each instrument and break it down one by one. We're going to start first of all with the RUT, small cap. If you notice the small cap on the daily chart, if you take the highs and lows, we retested that 1450, which we broke out of, came back up here. And at the same time on Tuesday, Wednesday, Thursday, which we have that gap, Friday recuperated, we retested the backside of the breakout where we started here. We closed right on it. In order to continue, we still have the 38.2 fib to come lower, the 50 simple moving average, and the 50 fib if we come back this low in order to get a reversal and come back up. If the trend does change and we clear the 1420 area in this area, 1425, then we continue higher. So we got to watch what next week offers us. Remember, the small cap was the lagger. It started the move down on Tuesday, continuation lower. We had Tuesday, Monday up. We tested the prior, H pattern of the breakdown, and we came back up. Let's take a look at now the Dow, $, DJI. And in a similar situation, the Dow Jones Industrial Average, you can see when it fell down, it created that H. We fell down. We're still in an up channel. We have this major gap here. We gapped up on last week's Friday. That was Monday. We went higher. We retested the prior breakdown from the H pattern, because we cleared it, we came back, retested on Tuesday, Wednesday, then we had this professional gap in the Dow Jones Industrial Average. On Thursday, we continued lower. We tested the 18 and the 116. We lost the 200 SMA. Came back on Friday, retested the 50 fib from high to low, the nearest high and low, and bounced back to the 18 and 116 closed. In order to lose this area, we have to lose 24,680 in order to continue lower and touch the 50 simple moving average and to go lower. In case we're going to reverse and go back up, look for the backside of the breakout and the gap. So let's now take a look at the NASDAQ and DX. This is the one that basically gave us a little bit more momentum to the upside. We came down here, we went up. I said do not short this area. Remember when I said we have a break above it? So it looked way above. We came back on Thursday, that was the down move. And on Friday, we tested the 18 simple moving average and we closed right on it. On Friday, we tested lower than the prior candles of this consolidation here and came back to close above the 18 and this smaller range channel. In order to continue, we have to continue up. If we don't, and we'll lose the 18 and the 20, look for the backside of the 9,300, which is this old gap here, and the breakout of this consolidation here, which would catch up to the 50 simple moving average. Let's take a look at now the SPX. And if you noticed in the SPX, when we came back, retested, we had that nice continuation higher. We had about 13 virgin control points. We retested 3 of them. And now we have still 2 above in order to continue higher. We are right above the 3,000, which we retested. We closed at 30.41. 3,000 is a very mental number. If we do lose that, look for continuation lower to the 50 simple moving average. The 50 simple moving average, or the backside of the retest of the 28.55, where the move started and has this gap here. We have 1 gap, still 2 gaps here. Those 2 are gone, and we still have 1, 2, 3, 4 gaps, I believe, to the upside with about 10 virgin control points. In order to lose this, we have to come back, retest the Friday's low and Thursdays in order to continue to get to the 50 simple moving average and the 38.2 fib in order to continue back up. If we can consolidate and go back up and continue, that would be great. So don't be biased to one side. We are in a nice symmetrical channel. What I want to do, get rid of this channel here, remove drawing. We're going to grab a channel, and I want you to remember, draw channels are your friend. Now you can connect this area here, if you noticed, with this candle here. And we can see it, that we still have the 50 simple moving average here. And if I connect it from this area here to that candle up here, we can see we retested that smaller channel, which is LCR, linear regression channel. And we're going to mark this with a lighter color. I'm going to right click on it, edit it. And what we do, we make it into a light color like a yellow and a small dash lines. This is the minor one inside the prior channel. If this holds, that would be great to continue higher. If not, we retest the backside of this channel. I hope this was helpful. Let's take a look at the GC, which is gold. You see, if you notice on the daily chart, I was looking a little bit further down, but due to the volatility, gold reclaimed this 1704, 1714, continued higher and retested the 1691. When it retested this one, we went lower. It touched the backside of this channel, and on Tuesday gapped above the, let's say, 1691 or the 1700 in order to continue higher. They gave you one more chance to retest it on Wednesday, and we continued higher. Whoever was long into gold made a great trade. As long as we stay above the 1724, 1723, stay bullish. If it falls below that and you lose the 1713 back to the downside in the upper cone to the down, we can put a midline in here. If you lose this area, we continue to the downside. If it holds the middle of this range, look to go back, retest the upper channel for a breakout. Remember, trade what you see, not what you think. And if the fear gauge, picks up and things do change, trade gold to the long side, because this will help you in the long term. Let's take a look at the CL oil. Remember, we were looking for oil to reclaim 100% of this gap. If you notice, the low of this one was 41.05, and the high of this candle last week was on Friday 44. So we missed it by a little bit. We retested. I said keep an eye on retesting the backside of this channel. We took a small trade on Friday in oil because it retested the backside of this channel, which we have from a long time ago, and the 18 SMA to the upside. We took a small trade as a day trade back inside this gap. In order to consolidate and continue, I'd like to see oil go back above the 38.60 in order to continue higher and eventually touch the 200 SMA. If it loses this channel, I would like to see the backside of this H pattern where it fell from, the backside of that 30 retested in this area, and the 50 SMA will catch up in order to buy it back to continue higher. If this holds, we retest the 116 SMA and continue higher. Look for the backside of this channel, the upside, and eventually the 200 SMA, which will catch up to this here, and we'll have 100% gap fill on that oil. Because remember, we have reopened the stores globally and domestically in the US, as well as, restaurants, shopping centers and stuff. People are starting to go back on the road, get some fresh air instead of being locked up at home. The economy is usually supported by the Federal Reserve Board, which I call the PPL Plunge Protection Team. The COVID-19, which is the virus, the coronavirus, if it's gonna, slow down, people are afraid of that. There's a secondary reaction in them because people are interacting together. So as long as we can take precautions and they find a cure for it by using the biotechs and finding a vaccine for it, or if your body's immune to it, you're not going to get sick, and you got the antibodies, this will help overall get things back online, from manufacturing, consumer products, to staples, to technology, to the oil sectors, to semiconductor industry, and the banking sectors, and the financial world. We can see that. Okay, let's take a look at the dollar sign BANK. BANK. I just wanted to put this up here on purpose. If you notice, the bank on this large gap from Wednesday, because it was weak, the Russell had that weakness in it because it's about 26 to 28%. In small banking sector, you notice that dump on Thursday, that big professional gap, and on Friday the Russell kept its strength and closed above, almost basically neutral next to the prior day candle. It looked above, came back, retested the low, and bounced back up. And as long as it can reclaim the 38.2, the bank, we can continue higher. This is the bank sector. And what I'd like to show is the VXO, or the VX. That's the electronically traded fund of the applied volatility. If you notice, I said keep an eye on $32 area. If it reclaims it, it becomes bearish. We had that momentum to the upside. We closed right on the 50. In order for this to continue, we have to make sure to keep an eye. We do not reclaim the $40.50 to continue higher than the bear market is in. If it falls back into this territory, because remember, we can get 3 to 6 month volatility in order to continue higher in the future, because the outcome would be a little different. Let's take a look at the overall airlines, because what I want to do is, in order to see the airlines, you can look at the XAI, because I showed last week AAL, is basically, this was the, the look above, they fell down, retested it, breakout, we came back to the prior breakout in it. If I do a comparison between the different airline instruments and stuff, it can give you an idea. We can use AAL breakout and retest area. This was the breakout. This was a nice U-turn. We were in that down channel. We broke out of here. We got that nice move up to retesting, reclaim this area where we fell from. And eventually on Tuesday, inside bar, Wednesday, Thursday. I'm sorry. This is the Monday. That was an inside bar. Tuesday, Wednesday, Thursday, Friday came back and pushed higher. If you notice, the Thursday was weaker, and we closed right above the 50 simple move. We retested the breakout, as you can see. If this is going to continue and things are going to go back online, people are going to go back in the future to travel, this will make a difference in change in the trend back to the upside, where we retested the 200, 116. We are holding the 18 and 50 still to the upside. So I hope this was helpful. We're going to go through a couple of instruments. I'm not going to do that much technology or consumer products or stocks. I want to show you how to be able to use a profile at the end. This is AAPL, which is Apple. Oops. AAPL. As you can see, we reclaimed portion of that engulfing candle on Thursday. Keep an eye on the backside of the 18 simple moving average and this channel from way back where we fell down. It shouldn't be any more in the chart, but I just have it there. So we'll keep an eye on the 18 and the prior breakout in here. If it does hold, to continue higher. If it falls, we'll look back for the 304, 314 in order to grab back Apple. Amazon. Oops. Amazon, pushed up. That was Wednesday. That was an annual high. Then Tuesday fell, Thursday fell down, and Friday fell down. Let's take a look at Facebook. Facebook has been side action. I don't like this channel because if it falls, it can get to the 50 SMA. This will, if you lose the 221 area in this consolidation in this area, I think the retest would be around this area here. That's Facebook. Let's take a look at Google. Google, if you notice, it's just right on the 18. This was an engulfing candle. Then we had a reversal, look below, and come back through it and close a little bit on the upside. As long as we can clear 1425, we can continue higher. If not, look for the retest of the 116 and the 50 SMA. NFLX. If you notice, Netflix on Thursday was actually bullish, but due to the market sentiment and everything, it got dragged lower. And Friday fell a little bit lower, but it closed right on the 50 simple moving average in the channel. In order to lose it, you're going to come back to the 38 and the 50 simple moving average, the 116, then continue higher. If it holds here, look for a reversal. Let's take a look at Tesla. This was one of the trades I called on Discord, and you can see me as well on Twitter on my handle. But let's take a look at this. I said the 1114, watch out from it. If it falls, we're going to go short on it, which it fell. It continued on to, because on Wednesday it looked up, Thursday fell down, retested the 968. It did hell, and Friday it fell right through it. This is a nice looking bar. If you notice, this low on this candle was 912.16 and this candle was 909.16. So there's a little area here, there's a gap. There's a second gap. If Tesla's going to lose it, you're going to retest the 18 simple moving average where the consolidation happened. If it loses that, look for the backside of this, and the 50 SMA will catch up to it, and the 38 will eventually move from here to here instead of down here. That's the 116 SMA. So I'd like to see Tesla back in this area for continuation higher due to the fact it fell down on Thursday and Friday. Let's take a look at Wynn Resort. That's a casino, and I'll do one or one credit card company. If you noticed, the casinos have retested where it broke out of, and it is holding the 18 SMA. If it loses it, look for the 38 and 50, see if it gets consolidation in this area, because this is the retest of the prior breakout. Where we broke out, we can come back, retest, and continue higher. Remember, watch what the outcome is. Let's take a look at the ES one more time, and I will break it down a little bit in more detail. This is the Fortune 500 company. I do have a lot of channels here. It's on the daily chart. What I'd like to do is move it to a faster time frame. We're going to look at it on the 4-hour or the 20-day 78-minute. If you notice, on the 4-hour, we were in a linear regression channel continuing higher. We were in the bottom distribution when we were climbing after we broke out this area, and we continued higher. Eventually, we didn't get to the upside of this channel. We touched a minor channel in here, which I did a smaller linear regression inside this consolidation. We had a couple of days consolidation here. We broke up, then we had a couple more days compression, then we broke up, and eventually those last 2 weeks were wiped out by the Wednesday bearishness in the market. Then we had that professional gap. There's this gap between here and here. What we can do is put an oval there to have everybody, or a triangle to show everybody how to look at it. We can look at this candle down here, okay, to this candle that's open here. Okay, everyone. And what we do, we can highlight it if we're going to come back and continue higher, or that would be a gap to the upside. So what we do, we're going to extend a couple of days to the right. We can push OK. So it'll show you that if Monday we're coming into the market, we can do one more. Let's just edit it. We'll do one more day. So that way we have a full, okay, that went a little bit more. That's fine. If we're going to come back and retest it, that's great, because we've got the 38.2 fib in order to continue higher. And if we're going to fall, since this is a death cross between the 50 and the 18 simple moving average, and we lose the 200 SMA, we are inside that smaller linear regression. If we're going to fall, we fall to the backside of this, and we retest the major consolidation in those two gaps down here. So we're going to trade what we see, not what we think. We're going to go from the style on the setting. And what I'd like to do is go to monkey bars. If you notice, this is a 15-minute, 10 days. Let's count. We've got day 1, day 2, day 3, day 4, day 5. So this was the highest in the stock market, which was 32, 31, 50. And the low of this was, where is it? We are at 29.71. And I had called all levels on Friday as well as Thursday when we were going to standard deviations, 3 standard and 4 standard deviations. So the low is 71. Okay, close enough. We go to the high. We're going to edit it. The high of this range is 32, 31 quarter. Okay, we're going to edit this property. We're going to create this as a quarter, 2, 5. We're going to do this as a quarter, 2. So we have a little bit more accuracy on these moves. If you notice, the profile was basically range bound in here in the last 5 days. We can look at the extensions where we can go up or below. And I did this on purpose, showing the 61 here instead of showing the 38 up here, because we lost the 38. We retested the 61 in the overnight. We fell back down where the POC was around here, and the time was here. So in order to continue lower, what I would see is basically those numbers here, the 2900, 29, 2970. If we lose it to 2808 area, if we're going to go back up, I'd look for the 3100, 3069, 3100, 3130, 3160 in order to continue higher. And I will show you why is this, okay? Before I do that, I'm going to go to 1 day to show you what the outcome will be for Monday, not being biased to either side. We're going to trade what we see. Remove this. What I want to do before I do that, I'm going to come down here. I'm going to show you two things in the trading desk where most people are not going to go, where did you come up with these numbers? I'm going to zoom in. This is historical, hypothetical number. If we're going to have a loss from the high, 2% loss on the S&P 500 would be 3060. If the outcome, the drawdown, 10%, 10.6, that would be looking at 1950s all the way till 2020, the current time. If we have a 10.6 drawdown, that would be 2791, 2920, and 2967. So these two numbers are very important for me not to lose if hypothetically I'm looking at that trend that way. So let's go back down. I'm going to show you one more outcome. This is taking a look at the S&P 500 since 1949. Okay, the 10-day breakaway momentum from 1949 till 2020. The average 1 year rate of return after we did that V shape on the S&P annual chart, we had that drop down to 27. From the 33.97 all the way to 21.74. After that V shape, after 1 year of correction, we get a 21% average return on a 2-year 33 all the way to 67%. The medium range is 57% historically, and if it is a very positive return in 5 years, we are expecting an 85% compounding rate on the S&P 500, or 100% of that move to be recovered and get a 100% rate of return. So if you're assuming you are not a day trader, you are a swing trader, look for basically products that will allow you to get levels and entries and exits. Let's go look at the last day of the move. Order. We're going to look at this last day, okay, everyone? Take it out. Whoops. Here we go. We're going to grab just this day by itself. I can do 2 days to show you what the outcome will be, but since Friday was the drawdown up and down, if the momentum is going to pick up, this is the low. Let's take a look at it. 71. Oops. Close enough. We're not going to change it to the high, which was 76.75. 76.75. Close enough. You see that? 0.7, and this one's 0.03. It's okay. My 50% fib is here, and most of my time was spent is up here. So if I take the percentage in here, what I'll do is take the percentage. I'll grab this level here to this area here. If I expect it to continue higher, we'll have a level to the upside. If I expect it to continue lower, there's going to be a change in a drawdown in the market to the lower side. So what I will do is activate the fib. Activate the fib. Grab the 50. Put it on the 0 to the 200. Grab my 100%. Put it on my 50 right here. If you noticed, my 161, the drawdown, we're going to get rid of this one. Remove drawing. The drawdown from where we closed on Friday, which is the 32, should be the 29.76. And if I do a double extension, it would come back down to the 2900. This is why I showed you the timetables to understand the 29.29, 2900 would be. Because remember, between here and here, you have a 50% of it, correct? And you have a 1, instead of 60, or, you add a 23% would be at the 29.55, then you'll have the 50% at 29.44. So to the upside, if things do change, then from where we closed here, we'll get to the 61, the 38, the 50%, the 0 line, and eventually up to the 38% fib. So I want you to trade what you see, not what you think. and B, don't be biased to one side, and the top side would be 31.45. In order to close this, what I want you to understand, remember, the tables I showed you are based on facts on hand, and the probability can change over time depending on the outlook and the reaction. As a trader, what I want everyone to understand, you have to be fluid, flexible, unbiased, open-minded, be open-minded to either side, and at the same time, read the charts that are offered to you, assuming things, what tomorrow can happen. Don't do that, because data will give us a look into the future, but you cannot assume this is bearish or this is bullish. So don't be biased to one side, trade what you see. Let's go back to the daily chart and put it back on the candles. And I wish everybody a great weekend. I look forward to, take care everyone. Look forward to seeing you again.